Hey, hello everyone. I'm JJ here from STVB. Okay, today actually I'm going to share with you a very interesting topic in trading itself. So basically, it is on how you can build your own trading holy grail. So what I mean by this, but of course, I'm not saying that this holy grail is 100% for win strategy that you're going to employ into the market and win you like millions of dollars. But what I'm going to share today is on this topic of formulating your own trading strategy, okay, depending on your trading style and all that. So today I'm going to cover two components which I will be covering are the first one, your analytical approach. So your analytical approach, right, what it actually means is that how you're going to make use of your analytical mind to understand the market and to see how you can make use of the data that you get from the market. Like for example, technical analysis, right? You are using technical indicators to derive some form of biasness for the market itself. And of course, you can make use of sentiment analysis. You can make use of more advanced techniques like machine learning or even I mean if you're just plainly using your technical indicators, right, it is also possible for you to formulate something out of it and then execute it in the market. So on the execution part, right, you can also see that this is the second component, which is your execution method. So execution method, it can be automated, like you just leave the computer to run the rules for you, because let's say you have set out a series of rule criteria ABCD for it to execute, and when something appear, like let's say there's criteria Y and Z, then of course the robot will actually run the methods for you. Okay, so that is on the automation side, but of course there's also on the hybrid. That means there's a combination of the automation and the discretionary trading. Okay, then on the other spectrum, that will be fully discretionary or intuitive trading by itself. Okay, so these are the two main components that are really required for you to build your own winning strategy. Okay, or we say it in another way, holy grail, right? Okay. Alright, so let's break down to the different way that the trader can actually analyze the market and formulate his or her own strategy. So I mentioned about this analytical approach, right? So analytical approaches, you can see that there is, under this analytical approach, there are various methods that I mentioned just now, and one of them is actually the quantitative approach. So quantitative approach, you can see that under this, there are subset like core quantitative methods, which really make use of those more profound or more technical statistical model or studies like this. Then of course machine learning, it also make use of some machine learning models which are also quite technical, but I think it is in my own concept could be easier to grasp rather than the core statistical approach. I mean, for machine learning, I do have some background in Python as well, and also in some of this data manipulation. So maybe it maybe will be more easier for me to go into that direction of thinking. Okay, then of course, other than that, you have sentiment analysis. So sentiment analysis, it will be more on the social media comments, or let's say the posting that is coming out from the social media itself. The factor-based approach, it can be short-term and long-term. And long-term wise, it will be, in a longer horizon, it will be more useful in terms of for the investment portfolios and all that. So all this, right, I will actually have a more in-depth analysis, or let's say not analysis, more in-depth breakdown in the further slide that I have. Okay, so on this spectrum, of course, for quantitative analysis, one of the most well-known person is Jim Simon. He has about, I think, 66% in terms of the profit that you get from the market, and then sort of like the RI before the taxes. I think after taxes is about 30-40% and all that taxes in terms of like commission and also his payout to his client and all that. But Yeah, I mean, nevertheless, 66% per year for the past 30 years, right, on average, is a very phenomenal record that he has. Okay, so he's one of the, I mean, his company is one of the top hedge fund trading company. Or okay, that's making use of a quantitative approach to understand the market and capitalize and leverage to earn him the money. Okay, then second approach, right, is actually the systematic approach. This more I would say more or less very similar to this quantitative approach, but I just break it down to a further one to illustrate that for systematic approach, it would be more like for someone that is utilizing EA robot, which is like the one that you use in your MT4, MT5, the robot that you actually run to, I mean, it has a rule-based system. So basically you enter, like a systematic trader. So basically you enter your criteria A, B, C, D for it to look for trade to enter. Then if let's say there is A, B, but there's never a C criteria that is fulfilled, then the trade never goes in. Okay, so it's quite different, or it's a subtle different from the intuitive trader. So intuitive or discretionary trader, right? Sometimes they will depend on their like belief, or let's say biasness, or let's say their experiences. They might skip some of the criteria, but of course this trader need to be able to know when to skip and when not to skip that part. But for systematic trading, right, it is all done by the robot doesn't know when to, yeah, like have this intuition to actually skip this criteria. Okay, so yeah, likewise for the exit, there's also a set of criteria for it to exit the trade as well. Okay, then last but not least, we have this discretionary or intuitive trader. So I think for most of the people, like 70-80% of us, we started off, yeah, discretionary trading. So discretionary trading, we really just rely on the chart pattern or some pattern that we can defer or infer from the historical price action. Like let's say you can see, yeah, maybe for example the price hits the Bollinger Band and it tends to come back. And when does it tends to come back more? Maybe during a ranging period, ranging market, and stuff like that. So that could be a more reliable signal for you to utilize this type of stuff. So those are more visual type of analysis that you're looking at. But of course, if let's say you are able to translate this visualization, right, into a code that the computer is able to understand, that of course you can backtest it automatically, and yeah, see how this idea of yours actually plays out in the history. Okay, so yeah, because we say that history repeats itself, so the best thing that we can do to give us some confidence about our trade strategy is to, yeah, back test it. So yeah, it can be chart pattern, it can be price action, the higher high, higher low, and stuff like that. Okay, so these traders are actually good in making use of their intuition, it be it from their experiences and all that. Then they're, yeah, and then they trade discretionarily. Okay, so for this, I have a very good example who is a eight-figure eight-figure trader who is from Trillion, I think, for one of the US top platform. Okay, so there's Lance Bernstein. Maybe some of you all know about him. So yeah, he has been quite active in the social media space as well. Yeah, teaching people how to look at things differently and have some nuances on understanding in trades itself. Okay, so that is some of this analytical approach that I wanted to bring across. And then of course next we have the execution method. So execution method, I have broken down into three of these different ways that you can enter the market or execute your trade itself. So basically the first one is fully automated. Basically you just rely on the computer to do the execution, the entry of entry and exit of your trade. All right. Okay, so those are more on the like high frequency trading, algo robots, and then secondly, you have a hybrid between systematic rule and discretionary. So sometimes I mentioned discretionary can override the systematic rule, so to give you some flexibility. So for example, in this case, right, you have algo entries, but sometimes it can be override by your own judgment, whether do you want this robot to get into the risk of, let's say, FOMC, which might be happening in an hour time. Okay, maybe you want to let it run after, maybe let's say 15 or 30 minutes after this, especially those strategy that you think that they have not been so-called trained to train this type of higher volatility environment. Okay, and then especially this FOMC, that there might be very sharp move, and also sometimes it happens that during this high impact news, right, there might be what we call it, spread widening by the broker as well. So those are the things you want to consider, and have a hybrid approach rather than fully automating that robot for you to run the trade. Okay, then last but not least, fully discretionary. So basically everything that you do is depending on the human itself, the human reaction to the price, it's their intuition and also their judgment. Okay, so basically you need to feel the market pulse and decide on real time. So that is the type of trader that will like to read the market and then understand the market. Okay, not saying that the others are not that doesn't like the market. It's just they want to be more on hands-on for everything that they are doing. Okay. Okay, so like just now what I mentioned, I have mentioned that I'm going to go into this quantitative approach, right? Which I will break it down in, I've already broke it down into some of this, what you call it? The subgroup of the quantitative approach. So the first one is actually, I think I mentioned about 4 of them: the core quantitative approach, the machine learning, all this I will mention it in a bit more detail rather than just on the broad, broad overview. Okay, so a little bit more in depth is that for core quantitative, they are really depending on the stats and the risk model and stuff like that, which you can say that it is more academic statistic, but there are some of these anomalies that has happened often in time, so that it can be analyzed and capitalized on. Okay, so basically they are very focused on the data, and then systematic as well, systematic rule, and it's basically automated. So in terms of the workflow for this is they need the hypothesis to test on, and then of course the data cleaning. So data cleaning part, I would say that in terms of this, be it this core quantitative or let's say the machine learning and stuff like that, the data cleaning part is, I would say, is a very important part of the so-called the whole process or the whole equation, because if you have garbage in, you will get garbage out. So if you are in this line of, like, let's say IT, or even in anything, like if you feed it rubbish, it will come out rubbish, right? Okay, so basically data cleaning and data manipulation is the important part as well, very, very important part. And then after that, you have the model building, you have the back testing and the deployment and stuff like that for core quantitative methods. Then secondly, I mentioned also about this sentiment analysis. So sentiment analysis, it can be looked at, like, for example, this is just a very simple example. I don't think it will work, but then okay, the thing is that, let's say there's always somebody, maybe the Fed chairman that mentioned about something about the USD. Every time he mentioned about the USD going up, the market react otherwise. So if it is able to, if you are able to capture that type of data and then you process it, that's only one variable. You need to have other variable as well. So Of course, other variable, you can also get them from the Facebook, Instagram, and TikTok itself. But yeah, anyway, nevertheless, yeah, if you get those data, they are in terms of the text data. So this text data, you need to find a way to understand them. Yeah, because like for example, right now, ChatGPT and all that, they are very good at understanding the natural language, right? Natural language processing. So basically, they can understand, like, okay, let's say for example, Facebook, there's this trading group that are very bullish about the US market. So there will be keyword like bullish, the trend is going up, or if I'm earning money from this bullish whatever thing lah. I mean, yeah, then it means it points to the direction that, okay, these people have this sentiment that the US dollar is going to go up, or US dollar is going to be bullish. So yeah, that's the data that you gather, and that's the data they want to process and understand. They basically decipher what it is that you understood from this data, and then of course you process and then assign some of this sentiment score for it. And yeah, like are they very bullish, or just mildly bullish, or neutral, or very bearish, and stuff like that. Okay, then of course you need to validate that signal. Does it correlate with something that you want to understand? What's your eventual objective that you want to achieve out of this data that you collected? Okay, so that's on sentiment part. And then very similar wise, you can also make use in terms of, I mean, in terms of the processes, right? In machine learning. So machine learning, it can be like price predicting. It also can be reinforced learning, or it can be structured, or those unstructured learning as well. So each of them, I think it really warrants a deeper search into it. But yeah, for the case of now, I'm just going on the brief overview. So basically, I won't be touching too much into it. I will be giving a brief overview, and maybe next time in my video, I also share a little bit more on this machine learning, and also sentiment analysis, which I am also very actively involved in it. Okay, so yeah, for the workflow for machine learning, you collect the data, same likewise, and then you feature engineer. So feature engineer is having some of these feature, like let's say fundamental feature. I mean, those feature that, like, for example, fundamental analysis maybe on P ratio, or stuff like that. And then maybe you also have a technical, or let's say a news release. And then let's say, for example, the news on the actual and the forecast is widely different, be it bullish or bearish sentiment. But I mean, yeah, bullish or bearish way. Then yeah, you can feature engineer it, derive something from it, and then after that you train this feature in the model itself, optimize, and then yeah, monitor the performance itself. And last but not least, factor based. So factor based, they are more into the focus on persistent market anomalies, and then basically they are using factors like the values, and it is more on like constructing a portfolio that you backtest, and then after which you rebalance it periodically. So I think I mentioned just now briefly, it is more on the like let's say investment over a longer horizon. So what it does is, let's say for example, there are some factors that you're interested to study on, or you feel that it has some impact on the future growth, or not say future growth, future price movement of this company. So for example, you have identified that, let's say, the P ratio to be higher than 25. I mean, this is just a hypothetical number. P ratio that's higher than 25, usually this company will show better price increase. Yeah, I mean, more sustained price increase 6 months later. Okay, then also that you are looking at the momentum. Let's say, for example, the price movement is on the uptrend for the last 3 to 6 months. Okay, this is a good indicator that it will still sustain this growth further onwards. Yeah, in the later part of the future. So that's another factor. Then thirdly, it can also be some other factor, for example, the size of the company. That will be more on the capitalization of the company. So those, let's say for example, you have identified that in mid cap company, those are the one that have better chances of it increasing in its price and all that. So these are the factors that you're looking at, and then you can plug it into your portfolio. I mean, to go and research on it to see how it actually come out in terms of your back testing and all that. Okay, so this is just a very hypothetical way that you can go about understanding this factor-based approach. Okay, then last but not least, of course, there are two others that I also mentioned: systematic approach, the discretionary approach. So systematic approach, like I mentioned before, it's really depending on the strict rules. There's no discretion, and often it's used in algo trading. So yep, the workflow will be defining the rule, you back test it, and then you also do the forward testing, and after that you also need to monitor this strategy as well. Okay, then lastly, you have this discretionary or intuitive approach. So this, I will say that, yeah, like I mentioned, 70-80% of the trader who started will be in this category. Yeah, based on their human judgment, based on their experience, and then yeah, reading the tape to execute the trade. So yeah, the workflow will be spot the pattern visually, and then backtesting it. You can backtest it manually, or you can backtest it on auto if, let's say, you are able to translate them to code. Then of course you need to practice them live or in demo itself. You need to journal them, because okay, journal also is a very important part of the equation, because it's that you need to understand where you went wrong, and then refine your process accordingly. So I mean, be it in trading, be it in anything else, like let's say I have a bad spending habit, so I don't know where my money went to. I mean, where I anyhow spend my money. So how I can go about better understanding myself, right, is I need to have some discipline, of course, to um, know where I spend my money. I mean, if let's say I don't have the habit to keep track of what thing I've spent, but I can actually go back to my this bank statement to see, I spent, let's say I bought a LV bag, I have bought a Gucci bag, or whatever. So those are the things that I will see, okay, is it a need for me to buy and stuff like that. So yeah, in short, is basically I need to keep track and journal my stuff to understand where I went wrong, and then refine my process or refine my habit again. Okay, so that is on this discretionary or intuitive approach. And this is actually a news that I've gotten recently. So basically it's only on March 11th. So it's more about being a trader, how adaptive or how flexible we are. So for myself, let's say, I'm gonna share with you all. I think 2 years back I started on my automation trading, and also I've been looking into ways into, like I mentioned, machine learning, sentiment analysis. Those are the things that I wanted to also focus on, where I can capture some of these values in the market that I might miss as a intuitive trader. So yeah, I mean, I still do my own trading. Most of all is, I mean, most of the time is based on discretionary and intuition. But of course, I do have trading robots that actually help me to run my trades as well. So those are the things that I also wanted to share a bit more as I learn along the way as well. So it has been a few years for me, and then yeah, these are the things that I wanted to mention. Yeah, coming back to this, yeah, in terms of the flexibility of a trader itself, and you can see from this is that after DeepSeek has been out, there has been actually a surge in the education of the AI, in terms of how AI can actually help you to trade or help you to invest. Of course, this data that they have is not in totality all correct. They also have a disclaimer, right? Data from ChatGPT or from this seed might be wrong. Yeah, you need to basically have your own judgment as well. So, but it really helped you a lot in terms of like in my case, if let's say I have some coding problem that I wanted to I mean I wanted to have some help, I can go to them and stuff like that. So yeah, for that case, right, it is really able to help me to troubleshoot some of, let's say, the error that I get from running my codes. Okay, so yeah, education part, it has been there's been the search. Then of course there's changing perception. So if you are not very familiar with the Chinese market, right, I think it was like 1 or 2 years ago they were very against this AI tools and all that. The reason being is that for the retailer, they felt that the quantitative fund, right, all this quant fund and those prop firm actually make use of all this AI to, in short, make the retailers lose money because of the volatility and all that. So they were quite against it. But since that this DeepSeek is out, I think they have the changed perception that we can also make use of these AI tools to actually leverage on this tool to help us trade better, invest better. Okay, so that's one thing. That of course, industry adaptation. I mean, for industry, they have been very in the forefront of adapting all these AI technology. I mean, algorithm and all this, they are not new things to them. And of course, yeah, in terms of this, they are thinking how they can make use of AI to meet the what you call it, the requirements by the client itself. Okay, so everything is about adaptation now. And then yeah, I would like to finish this off by saying that even, I mean, whether you are a quant nerd or you are a rule-based follower or you are a intuitive trader like most of the retail trader, there's always a method that really will suit you. So in this subsequent video that I'm going to share, right, I think I also want to share more on, like, say, the individual approach I mentioned just now. I'll be sharing things like machine learning and also things like sentiment analysis, how you can approach, I mean, how you can make use of these approaches to better formulate a trading strategy for yourself. Okay, of course, systematic approach is also one of them. So yeah, let me know which of this approach actually excite you to learn more. You can comment it in the comment section below. And if you do really learn something new, just maybe one thing, you can, yeah, be kind enough to actually subscribe to my channel. Okay.